I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of good ideas and opportunities for you throughout the show. This was a week when stock markets around the world got a little bit of a lift. Basically, everywhere you look, the markets were up, but hesitantly so, as there was lots of other background news that was moving markets. The talk out of the central bankers was relatively dovish. There was some rumors about the ECB and that they were likely to talk about tapering their QE program, but there was none of that in the discussions out of Draghi and the policy statement this week out of the ECB, and if anything, he talked down the possibility of a taper. In Japan, Kuroda, he said no slowdown in asset purchases there, so pretty much dovish talk and status quo as far as the central bank's action of trying to stimulate world economies by lifting equity prices. Interesting, huh? The yen, which has had a hard time recently in recent weeks, got some stability and near its lows, but the euro is in free fall. That is joining the British pound, that both of them look in horrible shape. I did a video this week for our members, you might want to watch it, about the world stock markets, and talked about the existential question about the euro in there and the different patterns that we're seeing in many of the world markets versus the European markets. So European markets are a source of trouble out there. Not that China isn't a source of trouble, with their growth coming in at 6.7%, and that Trump thought it was great news. He says, look at how good their growth is there. He must have forgot. They were growing at 11 or 12% before. And that 6.7% number is not a good number, and it's a deceleration. And they have a lot of problems over there. And there are massive outflows of money coming out of the yuan. And that value has been plunging. So what all those currency fluctuations have done has gotten investors a bit nervous as they're selling these other currencies and moving into the dollar. In fact, recently the dollar has gone counter to what we believed what would happen, as tons of buying has come in as money is being parked from all of these other countries that have had very weak currencies. And that, of course, is buoyant for our stock market over here when the dollar is strong and people believe money is coming in. The gold market, surprisingly, because it often runs inverse to the dollar, was on the firm side. Only surprising because you'd expect if the dollar was up a lot, gold would be down, but those correlations don't always hold up. In fact, some silver stocks, which I'll show you in the best of the week, really were flying on the upside. So gold held up. We're going to say it had like small gains for the week, especially versus the dollar, and with the big decline in the euro, also a time when you would expect gold to be moving down, but when the euro plunges and the British pound plunges, the price of gold relative to those currencies goes up a lot, and that has actually put a bid in the gold market also, as valuations relative to other currencies has had gold moving to the upside this week. So it really depends, what country you're sitting in as far as the price of gold goes. We believe that there's a little more time if you watch our Future Speak segment on Wednesday for some little more correction in gold, and then we think we're going to get into a modestly positive period for the precious metals coming up pretty soon. The oil market, small change, pretty much in the range that we talked about as it rallied up and then failed. After the producer meeting in November, we think the risks are going to build for the oil market, and we're likely to see some moves to the downside. Bonds, minor up week as a safety bid did come in also in there, but it wasn't really great, and we still believe there is big downside risk in the bond market also. As far as election, 17 days to go. I cannot wait for this election to be over. It is frustrating me. I can't even watch stuff anymore. I couldn't watch the last debate. I just caught the highlights because I can't stand either of them. So it's really frustrating for me. And the markets, they know that the odds are high that we're going to have President Hillary Clinton, and you would think that they would really be able to put some upside ground in the market, but they're afraid of the potential of a sweep, the Democrats holding everything. If there's two things that I think could really shake up the market. If the move to the Democrats is so huge that they get both houses, which is low odds, I think that if that happens, the S&Ps open that day, on the day after election, 30, 50 points on the downside. And if Trump wins by some incredible long shot, then I think you get the same thing, 30 to 50 points on the downside in S&P. So generally, the odds are higher that it's going to be more of a gridlock situation. The market's probably going to like that. And we could probably see at some point in here some even more firming in stocks because investors believe we're going to be in that continued gridlock status quo situation that leaves central banks in control, inflating asset prices, killing the values of currencies, and eventually causing the next great collapse. You heard that here, right? So that is the opening comments. Let's take a look at what happened in the stock market in this last week as we look at our 60-minute chart of the S&P 500. And you can see in here that it has been a choppy week. Interesting, I see a head and shoulders in here. Now, I don't know if that's going to be meaningful. Left shoulder and a head right here and a right shoulder right in here. We'll see if that does turn out into something. But we've had a characteristic this week of the market selling down and then buyers coming in every single day. You can see the sell-offs where they occurred. This was an overnight sell-off. Buyer comes in. Here's a sell-off in the morning. Buyers come in. A sell-off in the morning. Buyers come in. That's generally what we've seen. Monday, Fed Rosenkranz came out. He talked about the reverse twist. That means steepening the yield curve. I hate that, the manipulation. It's pure manipulation. And the stock market was weak in here. You could see that on Monday during the trading session. But then buyers started to come in. World markets got a pop as China inflation jumped. They're excited about that. And Netflix jumps 20%. I'll show you that in the best of the week. It can't hold the rally. You could see that. But then as it sells off, buyers come in again. It does close on the weak side, however. We've had some of those choppy days. As we can see. On Wednesday, China come out and they talked about their 6.7% growth. Oil was on the upside. Stocks moved up strongly in here, but then when the beige book came out and they talked about tighter markets, you got a tighter labor market. You got a soft close in there, a little bit of an inflationary fear that they saw in there. Thursday, the ECB policy came out unchanged. Oil was down, and Russia came out and said that, they could double their output if they wanted to. And so that got, oil more on the weak side. Stocks fell based on that as the energies got some selling coming in and then had that rebound, which seems to be happening all of the time. On Friday, equity markets were weak overnight in here. Draghi and Kuroda, they were talking overnight, and they were still dovish, and that really got the currency markets, in the euro just getting slammed. and the Chinese yuan getting slammed, and record lows that we're seeing over there, and huge outflows, and that had the market shaken up overnight. Then news comes out that AT&T is in talks to acquire Time Warner, a huge deal if the government allows it to happen, and stocks start to get bought on that news. So I would say that the Time Warner news was pretty significant. When you look at our calendar for the coming week, you could see that, well, the floodgates have opened, and there is a massive amount of earnings reports coming out. So there are going to be lots of moves in both directions as far as earnings come. You might want to take a picture of this off of your screen so you have some sense about which earnings are coming out on what day. The most notable popping out to me is Apple after the close on Thursday, but there are lots of big ones in here that are going to be meaningful. And then you can see that the news, the economic news for the rest of the week, there's no giant news in here that really I think could be market moving unless the Friday the GDP news comes out, and that is unusually big or small. Other than that, I don't think there's a lot in here that's going to move markets when we look at this calendar. So that's a look at the 60-minute chart and at our calendar for the week, and hope you like that. That's the end of the first segment. I'll be right back with the best and worst stocks of the week. Best of the week. I didn't see this one coming. Best stock of the week in our universe of 320 stocks, Netflix up 22%. A giant mover that you can see in here as we look at our weekly chart of NFLX. You know, we had this in this rising mode right in here, but there's no way that we could have guessed that we would have this kind of an upside move that we see right in here. Let's get a little closer look, and you can see that this stock, while we expected it to be, in a time where it could go up, right in this area here is where we expected some correction, and then potentially moving on the upside again. But look at this monstrous move in here. Earnings, a big beat. But the biggest thing is their subscriber growth was really solid. Analysts upgrading this stock, and this is one we really didn't see coming. Note that this is on my list of the worst stocks, the riskiest ones for 2016. Now, it was down all year long. At some point, so it was down very, very significantly in the area of 25%. And then it recovers and is now, in this week, gotten up for the year. So while it's not having a great year, it is having a monstrous week. Take a look here at this daily chart right in here, and you could see this big upside gap on earnings right there, and then continuing every day on the upside. We'll be looking for some pullback, as you can see that we have drawn in here, but then after that likely to get some upside movement again. So Netflix on this weekly chart, you can see just a fantastic move on the upside. The resistance in there probably comes in at that other high right around, we'll call it 132 or so. So probably has a little more room on the upside. Strong gain in there. U.S. Steel, the Steel's actually had a good week. U.S. Steel up about 18%. You could see the move in here. So this one has our colored phasing in it, and we had it in this positive phase, believing that it was rallying right in here. This blue line right there is the DBB. That's the base metals ETF, and we did a special video on that on Thursday where we compare the material stocks and the steels to the DBB. Often moves with it, and we expect the DBB to complete a bottom and then start to move up. So this group basically in this rising phase, that's why it's green. It almost broke down, but then gets this move up in there of 18%. Steel Dynamics, another one worthy of a look, STLD, also turning to the upside. You really got to wonder what this news is that's moving them like this. There was one report out from the World Steel Association that was favorable. And if there is anything that can happen to protect it from steel dumping from China or other countries, then maybe that's what's going on, is they get this rising phase and this big upside move. With this upturn coming there in the base metals, I really think that, on a dip, you can buy these stocks. That would be U.S. Steel, Steel Dynamics, or just look at AK Steel, AKS, Schnitzer. AK Steel up 15%, Steel Dynamics up 12%, Schnitzer up 11%. So a very solid week for the steels. If you take a look at some material stocks, look at Cliff, you could see our projection in here as we believe it's in an upturning area, and people that get our stock, our charts subscription, can get this on their TOS platform. So they have all of our cycle work and all of our notes and all the annotations that we have on the chart. So you see this turning up there in CLF Cliff, and we think that's a buy. Also, maybe get a little better entry in it. Valet, another cheapie in here. This is a stock that you see is moving to the upside. Also, these both had 11% gains on the week, Cliffs and Valet. And so this in an area where it even bottomed early and is moving up to that last high and beyond it, you can see the big inverted head and shoulders that's formed in there, right? I can actually produce that for you. All I have to do is come in here and grab this right here. This is the channel. And I'm just going to show you, whoops, didn't want to do that. Just click on this right here, and you can see the inverted head and shoulders right there. That's the neckline. This is the bottom of the head. If I duplicate that and move it up right over here, you can see a projection in there, a measurement that's up over $10. So that is a interesting pattern that is bullish, and we think can continue to move up. Also in the metals category, metals materials, let's just take a quick look at some of these silver stocks. Silver and gold, not having a great time of it at all, but it looks like the buyers are starting to come into these stocks. Sometimes the metal stocks move ahead. I had said recently that we saw a bottoming in these precious metal stocks coming soon. Got some emails from people that said, and comments on videos that said, sure doesn't look like it, but there you can see, look at Hecla and this beautiful morning star pattern, and it comes perfectly on the week that the bottom was due. So here's the declining period there. Those blue spikes are the window of time we believe the low will come in, and then the upturn. So you see that right in here, beautiful. And we think Hecla you can buy. Some news out on this stock was that their silver production is much stronger than expected, and they're loving that. And this stock is likely to make it to a new high above that 720 area. So we think get a little opportunity to buy a pullback. You can look at that. PAAS, another one, and you can see the upturn coming in here. Here's your colored phasing. This will now be a green phase in here as the bottom came right in time. Also, resistance zone way up here at around 19. So we actually think this has got a fairly good opportunity to be moving on the upside. Yes, I showed you Netflix, which was on my worst for the year, and PAAS was on my best 12 for 2016. And you could see how it's done. It's been spectacular. So you'll want to see what my best and worst are for 2017. Of course, that comes right around January 1st. So that's a look at these silver stocks, and I think you can buy them on a dip. Now, an interesting piece of news that comes out today as we see Time Warner in the middle of the day explode to the upside. TWX, now it's given some of it back. It's up about 8% on the day, 8% on the week, as the news comes out that they are in talks with AT&T to get bought out. Look at this weekly chart in here. So what we have in here is what our projection was. Okay, that said, that what we thought was this was a bullish pattern. In other words, you can see the stair-step upward move beginning, this cycle right in here, this cycle right in here. By the way, you could see the inverted head and shoulders that formed in there. And we expected a week or two of just on the downside here and then an upside move, but then that news comes out right there. The only thing I could say is that our technical indicators had it as positive. Look at it getting support on the 89-day moving average. This is the daily daily chart. Note right here where the slim ribbon turned positive. So this was a positive momentum situation. Our technicals basically were saying it was likely to complete that little downturn and then move up, but then it gets this big upside move. Somebody knew about it yesterday. Look what happened in there yesterday, and then it follows through today. So you can't tell me that somebody didn't have wind of it and that news starts to come out today. That just doesn't seem fair, does it? So that's a look at Time Warner. Bank stocks, they were strong this week also, some of them, and we can see in here the BK, the Bank of New York. This one reports good earnings. It goes up 8% for the week. And again, I want you to see. Now, what we often do is show the ETF for particular groups. They're usually in blue, like you could see right there. So that's the XLF. And you can see how this perfectly tracks the XLF. The black line in here is the cycle pattern for BK. So again, you can see here's where it turned up right in here. Beautiful. Turns down, it breaks these lows, so it's bearish and falls all the way down through the perfect timing. Does it again right in here, but it's a bullishly configured pattern. It says it's likely to take out this high, and it does it this week. You can see the pattern in here, just beautiful. This is really only the first week on the upside in here. It's pretty hard to make a bearish case for the stock market when you have things like this only in their first week of their advance, when they're likely to go for weeks and weeks. This is a beautiful pattern in Bank of New York on that very, very good earnings. Take a look at Fifth Third Bank, FTIB, another bank stock that reports, and this is a little bit stuck, so we'll come back and talk about this. The financials are often really important leaders in the markets on the way up, and when we start to see some of these patterns really do well, and when you look at Morgan Stanley, Goldman Sachs, they have been patterns that looked pretty strong also. It's amazing how some of these banks, especially that have their own trading units, have traded the bond market spectacularly, and a lot of those financials have done really extraordinarily well. So that's what's gotten the upside move in these stocks. Take a look now at Fifth Third Bank as it has gone through its corrective period, and again, this is a look at the first week on the upside right here. That's right in this area here. It's not likely that you're going to get anything. That's a yellow zone that we didn't even have time to put in there. So little correction and it ends, and now at an upside move, I can tell you this area above 22, it's highly likely it's going above there. So really nice pattern in there. One more in the financial category, credit cards, American Express. This one we really have to say we weren't in love with. It really had struggled, didn't get past that last high, and we had it in a yellow zone, in other words, a corrective zone. And it had a really nice earnings report. Let's put it this way, much better than they feared it would be, because there was some hesitancy on their earnings forecasts. So this big week in there, we don't actually think it's going to do a lot better. Probably this corrective period out into November, we'll see some pullback in there in American Express. So not a fantastic pattern when we look at that, but certainly did well, up 11% on the week. So that was a good gainer. A couple other stocks to talk about that did really well. Microsoft, it appears that they are just executing in a fantastic way as far as their cloud business. So it was in a correction, and we thought it's pretty similar to what we thought in Time Warner, where we thought it had another couple of weeks of the correction. Of course, you never know what's going to happen on earnings, and Microsoft then turns up again. So we still believe that even though it's done really well here, up about 4% on the week on their cloud business, that it is likely to pull back for a couple of weeks in here, and I think that will be a buying opportunity. Can it get back down to that low near that support zone? I have some doubts about that, but we're more concerned about the timing in here. So it comes down for a couple of weeks and then moves up to new highs right in that area there. I think we will see it in the low to mid 60s before this upside move is over with. But we think that the best time for it will be December, January, and this probably gets to take a little bit of a rest. One more stock to look at, another rumor stock, was Coors. This stock got a pop this week on some rumors. I don't know the specifics of the rumors, but when you look at this pattern, you can see the perfect cyclicality that's in here, and that look at the declining phase and the rising phase. You see that, and the declining phase and the rising phase. By the way, I'm working on a cycle workshop, recorded video. It'll be a whole bunch of videos. That'll be ready in a couple of months still. So you might want to go to my website and sign up for the cycle workshop interest list. Then when you look at something like this and you say you get that big upside week, you just got to say to yourself, where there's smoke, there's fire, because it's early in that upside move, and the probability based on cycle theory of it getting over 53 is probably about 75%. We're going to say that this is a good pattern. Now, you can see it here when we look at the daily chart. The smaller cycle patterns that we see in here, so the rally phase, the decline, the rally, the decline, the rally. You can see we're in that rally right here. And we have momentum, which was negative. You can see that little arrow on the slim ribbon, now neutralizing. Generally, when you get something like this happening, when you pull back to the slim ribbon, right around that 13-day moving average, that's the blue line, that's usually the buy area. You can see it got down close to that today and then started to pull up. I would say this is a high probability that this stock is going to make another move on the upside before you know it. So that's KORS, up 3.5% in the best of the week. And that might be one of the best of the week because we think it's getting close to a buy area. 47.5 to 48.5, probably a good spot. That's the best of the week, and I'll be right back with the worst. For the worst of the week, and I've said this before, in my 42 years of trading, it seems like I've seen quite a number of companies that had kind of flash in the pan, hot, fad type products, all of a sudden, not be hot anymore, and the stocks would just get pummeled. And I've seen that a couple times in shoe companies. It seems like, something gets hot and it's over with. One of the stocks that's completely avoided that is Nike, because it's the breadth of their product line and the massive licensing that they do really has kept that company really in strong footing. How do you like that? But in the case of Skechers, that wasn't the case. And man, when that stock was trading up around 50 or higher, I was warning about that. Remember when LA Gear did that? I think it was way back in the early 80s or something, and just total collapse. Take a look here when you look at Skechers, and you can see in here that this stock, when it was way up here, was just ridiculous. And I was screaming about that, actually. There's where the cycle action is, right in here, if you want to see that right there. And this low isn't due until, well, late in November, I would say. So here it has a big week on the downside, and here 16%, and the earnings just were not up to what expectations were, and that was just a bad decline. Take a look at it here on the daily chart. You can see that it had this massive gap on the downside last earnings. See that right there? There's the earnings report, huge volume. It continued on the downside skidding. It got a rally up into, the slim ribbon. Here's where the momentum turned negative again, and you can see big on the downside. High volume in here. It could, make a temporary bottom when you get high volume. It usually does within a few days. High volume, and I've got a video in our in the category of tools for techs that talks about high volume and the importance of it being the beginning of something or the end of something. Usually when you get that, you make a temporary bottom, you can get some kind of a bounce, It took a while for it to happen back here last July, and maybe it takes another few days you get a bounce, but because it's massively oversold as far as the short-term readings go, but all it has to do is correct that by a little bit, and it'll be heading to the downside again. So Skechers, everything about this has been negative, and it still has probably another month on the downside. Another one, this is kind of the worst of the week of stocks that we have hated. Cree's another one that we have hated and have seen it in a negative pattern, and here it's continued to move on the downside. This one, earnings beat, but their outlook was pretty bad, and analysts have really been downgrading this stock. You can see in here, this also looks like a decline into the end of November, so it's getting beaten up here this week, and we think it will take a while before it's able to get its footing again. eBay is one that we did not necessarily see coming in here. There were signs of a topping. Now, what are the signs of the topping? Well, first of all, it's late in the pattern. In other words, it's gone up for about 2/3 of the time right over here. Note this one went up for about 55% of the time. This one went up for about 55% of the time. This one about 2/3 of the time, right? And each of these periods right in here bring declines. You can see that, and here it is right here. And here's your shooting star warning on the weekly in eBay. So that says to you that there are sellers up there in the market. And now you get this big downside here, and again into mid-late November before this declining phase is over with. Note that every single one of these declines was at or below this 34-week moving average, so you can pretty much put a target in there, like right there. Maybe 28 is the number here in eBay. Not in a hurry to buy this one. When I see this pattern, I think there is more on the downside in eBay. Now, sometimes I get things right? As a matter of fact, talked about several weeks ago, I talked about Dick's. I thought that stock was blowing up because of the Olympics and thought it would get a pullback. And it fell like about 5 points after that, so that was a great trade. Another stock that I warned heavily about the last couple of weeks was Yelp, and that was because it had been pumped up because of Twitter. And it was just at stupid valuations. And I thought it was a good short side trade. And I've mentioned that a couple of times. And just want to show you this beautiful thing in Yelp. Beautiful, if you believe me, on the short side, because the pattern just was magnificent. Here's the pattern that you can see in here, and as I blow it up, there was the perfect evening star. I think we talked about that last week, didn't we? And that my first target was right over here. You remember I showed you that around 32? Now it's getting close to it, and I admit, now I've taken my profits in this one because the stock has fallen some 8-9 points off of the high. I believe that now if you follow the pattern in here, the rally and the sell-off, that's this right in here perfectly. It looks like it might have another week or so playing around in here. Then if it bounces, you want to sell it again because there could be some very serious declines. Out over here, my second target down around the $29 area. So I think that is a possibility for more on the downside in there, and waiting for upticks to sell in Yelp. This was a beautiful one, and I certainly hope that some of you out there caught it. Other stocks that had a rough week this week, Travelers was one of them, TRV. We'll take a look at that chart, weekly chart. This is a bearish breakdown on these cycle patterns. I'll show you what that means. As the stock falls about 6%. Their earnings beat, but the profit's down about 24% on the year. And this is ugly. This is pure ugliness. This is, note right over here where this important cycle low is. You can see that. I can take you right to these nested cycles here. This one a little bit off, right? You can see that. And then right over here. So what this says is that this time period all the way out to here is where the negative period is. That takes you out into around the end of the year. So we had a decline, right? And that's this in here. That was where it lined up to perfectly. You expected in advance, right? And there's your advance right in here. But then the news comes out and it fails. It breaks this low and it breaks this low. It says that this period in here is likely to give you a decline, and we wouldn't be surprised to see it go for this support around 101. It's now 108. So travelers, a really bad pattern, down 6% on the week. Another stock in this stocks I've loved to hate that I have mentioned is Consol Energy, CNX. This is a double whammy stock. Why is that? Well, it got the Hillary Clinton double whammy. She's looking like she's going to be the next president, and Consol Energy is in coal, you got to laugh, right? And in fracking. Holy cow. Well, she says that she's against fracking, but if you look at her comments back to some of the big firms in 2014, thank you WikiLeaks, she was pro-fracking then. So it really depends who she's talking to. But right now she's against fracking, double whammy as far as that goes. So CNX, which is one we said, there's nothing left to sell in coal. You might as well sell CNX because it was in a corrective phase. There you go. You could see this declining phase right in here. The bearish engulfing pattern and the next week on the downside. And no real news, earnings coming in here on November 1st. Take a look here at this daily pattern we're looking at. And I show you this because of the 89-day moving average, which often is an area that it kind of gets support. You can see that right there. Now, this is really important. You can see the downturn right over here on the slim ribbon. That is the negative momentum. And you can see this important support area. You can see this kind of a trend line I can draw right in there, and the importance of this area. Between now and election day, I could see more pressure on this one. So down 6% on the week, a bad one, and should continue to fall into the November period. Union Pacific, UNP, they down 6% on the week. This is another breakdown in here. Love it when I can show you these great cycle patterns, as this has now gotten, see this pattern right here, and then the rally, and then the sell-off that goes into December, and this breaks under this low. It gets to the support zone and the 34-week moving average. It has all of this time into December to fall. Yeah, it could get some support in here in that zone, but if it got a bounce right in there, man, that is a screaming short based on this pattern. It's one of the highest probability short patterns that I can show you in Union Pacific. Let's take a look here at this daily pattern in here. Now you could see we had it in this steep decline, and you can see it's gotten way under it, much steeper than we even had it drawn. We think if it rallies, it's going to be a sale. We'll be redoing this right in here. So what level would be the sale? Well, we're going to take a look at the Fibonacci tool right in here. I'm going to grab this high, which is the top of this cycle, down to this low right over here. And my sell zone would be right in this area. Let me just grab this channel indicator right here and show you that my sell zone is right over here. Mark that off. Let's take this off, and that would be right in between the 93.75 area and 94.70 area. Also coming back to the underside of this 89-day moving average. So somewhere in that 93.94 area would be the area that I want to short it for a high probability short side trade. So I kind of feel like I wanted to bring you a lot of our analysis today so you could really see how we do some of this stuff. IBM is the last one we're going to look at in the worst of the week. It's in this yellow corrective phase, and it's down about 3% on the week. Their earnings missed. There is a lot of cloud competition out there. Microsoft doing so well, Amazon just controlling the prices. Their margins were really weak. Analysts are now downgrading this stock, and I have it as another 4 to 6 weeks on the downside. I could see 140 on this stock, another $10 on the downside before this pattern is over with. So IBM, another one I want to sell when it gets an upside pop. And you can see, based on looking at our daily pattern in here, that our expectations are that starting next week, and sometime middle of next week, it's likely to get an upside pop. And that's when we're going to want to sell it in that minor resistance zone right around the 153 area, because trading from 153 to a potential of 140, that's a good trade, short side trade. That's the worst of the week, and I'll be right back with my short-term view. All right, before we get into the short-term view, I'm excited. This coming week is the week of the release of our new video recorded workshop. 6 videos long, about 3.5 hours worksheets. And if you want to see a workshop that teaches you how to trade, gives you systems, really tells you exactly what to do in the markets, you're not going to want this workshop at all. But if you want to see a workshop that is essentially a giant reveal by me as I tell you about lessons I've learned in 42 years in the markets, and work hard at the lessons around how you can engage in the market in a much healthier way, and therefore raise the odds of you being successful at it, then you're going to love this workshop. It's deep. It goes into areas that probably nobody else does, because I'm 20 years trained as a personal growth facilitator, as well as 42 years as a trader, and I think you're going to find it just incredibly valuable. The workshop is essentially a 5 building blocks that we're going to look at. We call it our 5 essential building blocks to successful trading, and we go over defining a healthy role for trading in your life, building the emotional fitness you need to control your reactions, how to match up your style and method with your personality, and lots of other aspects, adopting more than just the rule of not taking a loss, but 6 areas of discipline, and designing the plan that really is unique for you, because you are a unique individual, and not every trader is the same, and we talk about that a lot. You're going to think this is really great. Go to our website, go to the bottom of the front page, you'll see a puzzle piece that says 5 essential building blocks. Click on that. If you do that this weekend, you can sign up just for our interest list. Then we'll know to send you the link with the information about it. We'll protect your email. We don't advertise it. We don't sell it. We don't do any of that. So sign up for it. I think you're going to really, really think this was a valuable and good investment into this workshop. And believe me, based on what workshops cost these days, this is not expensive. All right, so now let's get into our short-term view of the coming week. Do this every single week. We take an accounting of how we did in the previous week. Our goal is to get, above the 50% area, hopefully 60 to 70% correct. Generally, if somebody is 65%, they're twice as right as they are wrong. That's what we came in this week, 65%. As we got the light crude market pretty much spot on. We also did really well in the bond market, and kind of half rights in gold and the euro market and in the stock market generally. So we'll take a look at this and take a look at light crude first, which is always the first one we look at. And you can see here our daily chart. Now, our daily charts on futures and on the what we call our rankings and setups list, it's a total of 80 symbols, 81 symbols now, I think, as we just added Lululemon. And this, on those, on our daily charts, we have a lot of information. That's really where we do the core of our work, because it's the best stocks or futures to trade and ETFs. And that's why we have so much more information on them. Here's our light crude chart. And what we said last week was that we thought the short term and intermediate term were fighting each other. We thought it would be a small change week, and that the range would be $51.60 to around $49, right around here. It was a little bit higher range than we expected it to be. Not bad. It got up above that area and then failed, as you can see. So pretty much right on this. Now, we still have a corrective period that we believe is in place in here. That's this right in here and this smaller one right there. So we kind of think that the risks are a little bit bigger to the downside. We're going to call it another week that fails. Same range, maybe a little bit lower that it could get on the downside toward that $49 number with a slight edge to the downside. That's really the way it looks to us. But again, thinking that, this is really the range it's going to be in, and it's, for premium selling, we think that, when we say that there's upside and downside fighting, usually that is the case. And you could see that worked really well in that case. Another example of that would be, right in this period right over here where they fight each other towards the peak of that cycle, and you could see it traded in a range then. So this peak right over here comes later than this peak over here. You'll see that. So that means that there's less time for decline, only a little bit, right? Just about a week. So that's why we think this will be a corrective week, and then after that it moves up. We'll call it a small down week for the light crude market. The gold market, we thought it would test 138. It got down to 1238. It got down only to 1250. We thought it would, kind of come down and then rally. So we had the shape of it right. /GC is the gold market. We had the shape in gold correct, but we didn't really have the numbers right in here. So we thought it would be, down early in the week, and then it would get a rally, and that's basically what we got. We get credit for shape, but we don't really get credit for price because it didn't get quite as low as we expected. So now this shorter term pattern, what it looks to us like is that it shifted a little longer on the downside. Now, we talked about shifts in the past. When that happens, it's a negative occurrence usually, because it tells you that the selling is more dominant. It makes it go down longer. Then when you have the rally phase and you only do this, kind of this bear flag that you see here, it puts the risks on the downside. So we're going to again call for that 1238 area or 1211 as a possible downside target if it really accelerates. We're getting to the end of this period. Now, I talked about earlier about the silver stocks, and we think if we're right that this is going to get hit and then it's going to turn around again after that. So the way that pattern shapes up is such that a decline, and we hope it's steep, gives us a good buy opportunity in some of the precious metal stocks and stuff like that. That's kind of, a little more information than I normally give here, but what we want to do when we get into what we think is a final stage is to kind of get in our mind what things we would like to buy, because we think it'll be a high probability of an upside reversal. So we're going to call this a down week in here, testing 1238 and maybe testing a little bit lower than that before this declining phase is over. So that's a look at gold. We only get half credit on that one. The euro currency is another one. Now, what we said last week is that it's in a lot of risk and a horrible pattern, and likely to go down in some sort of a big way into November. We said all of those. However, we thought it would be a minor up week. We thought it would rally up into the resistance zone, which was moving lower, and then would turn over, and overall a horrible pattern. We thought it would fail from 111. It failed from 110.67. But I'm only giving myself half credit for this. Some people will say that I should really take full credit, but I'm not, because we said it would be an up week, even though we said it would fail. So we didn't give it this credit, though. You can see the pattern right in here is pretty clear. So what we believe is we're going to get an attempted bounce this week. That's this pattern right here. That cycle, small cycle pushing up. 109.75 to 110.30 is our sell area. This is 109.75. That's the 23% right there. Right over here, 110.30 is the 38% of this declining phase right here. So those are our targets. We believe those are sell areas, short sale areas. So if we get the bounces we expect, and we expect the dollar to have a small downtick for 2 or 3 days based on its pattern, we think that the euro is going to be a sale. And you're going to hear from us a lot that we think there is existential risk in the euro currency and in the eurozone as we get into 2017, and this is really screaming at us when we see this pattern. Potential rally this week, we believe it will happen and that it will fail. Our notes have this kind of a pattern drawn on it like that for this coming week. The bond market got it right. We said that the /ZN would have a rally and get up into the minor resistance zone, which we believe that was a sell zone. It's been in there 3 or 4 times already, and then backs off. We said 130.12 to 130.20, and that's exactly what it did. The 30-year we said could get up to 166. On Wednesday, we reduced that resistance to 165.15, and that's about the area that we think the resistance is now in there for the 30-year. So we think that this week rallies continue to fail, and that at some point it comes up here and then turns down in a hard way. So we think you continue to sell it and think only the short side in here, because the big intermediate pattern looks really horrible. So 130.20, 12 to 20 is still the zone, the same one we gave last week, and 165.16 to 166 is on the 30-year, and I've got doubts about that one being able to get up there. So that's a look at the bond market. So for the stock market, what we said last week was that there was risk in the market for about 3 or 4 days. We thought it would come down and then it would go up again. Now, that pattern has skewed itself a little bit further out than we expected it to, and so we are going to get partial credit for that too. I'm going to show you what happened in here in the S&P 500 SPX versus what we expected, and take a look at what we think is going to happen in the next week. So here is the a pattern as we see it. Now, this what we expected was that we'd get a down early in the week, but it would go for a few days and then rally. So it did go down early in the week. It did not test this low. You can see it didn't even really get that close, where that's the low that we thought would get tested around 21.18. It gets down to 21.24. So, you know, it was close enough. Then we thought there would be a rally. So basically on the shape, we got it right. The didn't get as low as we expected, and we're looking at the potential for this cycle having shortened and being in a more bullish pattern. Now, here we are 6 days off of that low. So most of these patterns run about 7 to 9 days. So what we're expecting is some minor pullback here early in the week, some kind of a pullback. Maybe it still tests that low. It still has time to do it. And then after that, turn upwards. So yes, we're getting into a period where this pattern in here is suggestive of some bigger attempts on the upside that we've been seeing. We've been seeing markets fall and then come back intraday. I have a feeling now we're going to see a couple of days starting by midweek next week of some better upside. We're going to look for this area right here, 21.55. That's only 13 points from where we are right now late in the day, as the first spot that we expect it to attempt and maybe stall at. If it does better, right up to, it would take you up to this area right over here, about 21.72. So 21.55 to 21.72 is the upside area that we expect to see the market move up to. Then we think that the pattern is going to roll over again and give you a much, much bigger decline. That it would be something that would be, I don't know what that phone is, somebody please pick it up. That would be potentially a good shorting area when we see that pattern in, that's annoying, really sorry about that. That could be, or this area right up here would be the next shorting area for the market. We're going to keep in mind that zone 2155 to 2172, and that probably by midweek is the time it starts to turn up and gets over there. So we are going to call this an up week in the market, and that is not something that we've been calling lately. But when we look at these patterns, this pattern in here from this low to either this period here or this period here, you could see is it's ending. So in other words, this declining phase is ending, and this window of decline, it could have given a much sharper downside than it did. But buyers are coming into this market every single day, and we think that unless you get a rally that fails, you can't really get a sell-off that is meaningful. So while we think that the risks are high on the intermediate term, still, as we come into this election, we think that we're coming into a week now where the market can get some lift and actually be able to hold on to it. So we're going to call it an up week coming up for the stock market after maybe some early one more attempt to the downside. And that up week probably continues into the following week as we move towards this election time. So as far as the VIX goes, because we're looking for an up week, we're kind of looking for the VIX to get sub 13 before it then gets ready for, I think, what would be a bigger lift as we get closer to the election time. That's it for Market Week. We hope that there was great information for you in here as we bring all of our teachings. If you're interested in getting our charts, don't forget you can be a level 4 member and get all of this information on our charts for your TOS platform. Go sign up for that workshop for the interest list, and then when we announce it, actually then sign up for it. I think you're going to get a ton out of it. And I think it's very reasonably priced too. So that's it for Market Week. Wishing you a great, safe weekend. Be careful because it is crazy out there. And I'm always wishing you great trading.